A warm welcome to all the viewers to our YouTube channel RVD Media. In this video we will be analyzing the Indian Railways Finance Corporation IPO. The overall objective of the video is to enable you to arrive at an informed decision on this IPO. Let's start with the profile of IRFC. Indian Railway Finance Corporation is the dedicated borrowing division of the Indian Railways. IRFC primarily finances the purchase of rolling stock assets, which includes the powered and unpowered vehicles such as coaches, locomotives, trucks, wagons, containers, electric multiple units and trolleys. IRFC also plays a role in the leasing of the railway infrastructure assets and national projects of the Government of India. Further, it offers finance to other entities under the Ministry of Railways. The organization has contributed significantly over the last 3 decades in enhancing the capacity of the Indian Railways by financing the annual plan. Let's have a look into the IPO details of IRFC now. Indian Railway Finance Corporation's initial public offering of 4,633 crore has hit the market on January 18 and will close on January 20. IRFC is issuing shares at a price band of 25 Indian rupees to 26 with a minimum lot size of 575 shares. IRFC is offering up to 178 crore equity shares with a face value of 10 Indian rupees each. The initial public offering comprises a fresh issue of up to 118.8 crore equity shares and an offer for sale of up to 59.4 crore equity shares by the government. IRFC filed its draft red herring prospectus for IPO with SEBI in January 2020. Up to 50% of the net issue will be reserved for the qualified institutional buyers, while the company has reserved 35% of the issue for the retail investors and 15% of the issue will be reserved for non-institutional investors. The Indian Railway Finance Corporation proposes to utilize the net proceeds from the fresh issue for augmenting its equity capital base, to meet the future capital requirements arising out of growth in its business and general corporate purposes. A quick glance at the financial performance of IRFC over the last 5 years highlights the robust growth displayed by the company. Within 5 years, the total income of the company showed a CAGR of 12.99%. The profit after tax grew at a CAGR of 33.95%. Also, IRFC's total assets grew at a CAGR of 16.04%. These are phenomenal figures for a NBFC. While the long-term debt also increased at a CAGR of 26.35%, it can be attributed to IRFC's business model. While it takes long-term debt, it has a lease agreement with the Ministry of Railways that ensures the repayment of the debt. Its financial performance is indicative of its fundamental strength. Supporting factors for investing in this IPO. Indian Railway Finance Corporation plays a strategic role in financing the growth of Indian Railways since it is its dedicated market borrowing arm. Offers a competitive cost of borrowing, since it has diversified sources of funding and has the strongest credit ratings in India. It has performed consistently over the decades and has a cost-plus standard agreement with the Indian Railways that allows it to generate steady revenue. IRFC has a low-risk business model due to the nature of its agreement with the Ministry of Railways. It follows an active asset and liability management strategy that ensures a minimal mismatch between assets and liabilities. Over to the risk factors that investors should be aware of before investing. IRFC derives a significant amount of its revenue from operations from the Indian Railways. Therefore, a potential loss of or reduction in business from the Indian Railways, or any direct borrowing by the Indian Railways, or the introduction of any new avenues of funding by the Ministry of Railways could have an adverse effect on its business. The D/E ratio, debt to equity, is very high since IRFC has high long-term debt. The profitability of IRFC is heavily dependent on the Ministry of Railways accepting the margin over the costs as profit. Valuation of this IPO. Due to the unique nature of the business of IRFC, there are no peers, hence for the valuation we can compare the intrinsic value of the firm with the proposed IPO value. The intrinsic value of this IPO can be calculated to be around 90,000 crore approximately. As per the details in the IPO structure, the proposed IPO value is about 4,500 crore. Hence, if you are a potential investor, There is a huge opportunity for your investment to grow. So what's our verdict on this IPO? Investors should invest in IRFC IPO only for long term. We don't expect a big listing gains of say around 40 to 50% for this IPO. Expected listing gains is between 10 to 15%, which is relatively less in comparison to the other IPOs in 2020. Also, on the end of the second day of the IPO, the grey market premium is not quite encouraging, hence the investors can invest if their financial goals are long-term oriented. With this we come to the end of this analysis video. We are sure that you would have found our information to be very crisp and insightful. Do subscribe to our channel and share it with your network for more such insightful videos. We will meet you again in the subsequent video, where we will be analyzing the Indigo Paints IPO. Until then, this is Anamika signing off for RVD Media. Thank you.